All right. Well, first things first. Once again, I want to welcome you all to our Wednesday market recap. Thank you guys for again sacrificing your time to be here with us. And as usual, we're going to be having a Q&A session at the end of the chat period. And once we're done with the deep dive into the market and kind of what we saw in some of our trades that we took and our positions, we'll spend about the last half of this going into questions for those of you guys who are new here. But in the meantime, if you do have any questions as I'm talking, feel free to drop them in the chat. If they're able to be answered within the flow of the analysis, I'll answer them there. So don't feel, don't be too shy. For those of you guys who have never been here before, don't be shy and ask questions. There's no such thing as a dumb question. Okay, guys. So I want to make sure you guys are empowered and comfortable to do so. So that being said, let's get right to it. And the first ticker we're actually going to look at today is Google. For those of you guys who have been in the server for a while, you guys know that this is actually my favorite ticker. Not just for trading options on it, but also as a long-term hold. Google is a fantastic company, and it's one that we use every single day, right? So I want to take a look into what I was looking at on our day trade when I alerted the Google calls, and what would be good entries and exit points for those, right? Because a lot of times I've noticed sometimes people have some trouble timing their entries and also timing their exits, right? For those of you guys who just joined, welcome to the call. Right now we're going over Google, so we're going to be taking a look at the Google alert that I gave out this morning. So if you look at our entry point, right, when I gave the alert today around 9:50, I think it was 9:45-ish, from being exact, 9:49 to be exact, I alerted Google calls 125 strike for Friday's expiration, and I filled at 105, right? 6 minutes later, or 5 minutes later at 9:54, we had an 11% return. So what happened? Let's take a look at this exact timestamps, right? So 9:49, I was looking at a potential bounce off of the EMA 200 when I took my entry, right? So as we see here, we retested the EMA 200 at 9:49, right? And as you guys see, this is the time frames. Retested right there in that green candle, right on the nose, right? When I got the fill is when I alerted. What happened in that minute time frame? Well, we retested 200, bounced quickly, and then we had a bit of a sell-off. I was actually red slightly at the point at this candle here. Why was I still holding and not panicking? Because for those of you who have been in our most recent market recaps, we know that if we're getting a bounce off the 200, the 200 is the point of no return, right? It's also our clear support line. So holding through to see what we did after that candle closed on the 200. And what happened? We bounced, right? Got a green candle, didn't go above the EMA 60, but we didn't go below the 200 as well. So in my opinion, this is also a bullish sign, right? Who can tell me what else occurred on that bounce? Not just the retest and the original retest where I took the entry at 9:49, this one and this one. Who can tell what was also happening there? And for those of you guys who are new here, I'm pretty interactive with what goes on in the analysis here. So I want to make sure you guys are understanding what you're looking at, right? And not just listening to me talk for 30 minutes. Yes, you guys are 100% correct. We got a confirmation of the double bottom. And for those of you who do not know what a double bottom is, it is this pattern here, okay? Nice little pattern. We did not cross below the previous support line. We actually got a nice bounce. Double bottoms typically form a W shape, as you guys can see here. Okay, so that was confirmation that we were going to be in a slight uptrend, at least in the immediate short term, right? Also helps that our RSI levels are trading right on the average line. Now that could be, good or bad because there's no clear direction that the ticker's trading in. It's just kind of like floating there. But seeing our retest of our next area of resistance, which I'm going to highlight here, when I hit my 11%, which was at 954. So let's take a look at what happened at 954. Right here, we got the bounce. We have the candle close above the EMA 200 or even the EMA 60, right on line with the EMA 50, which, if you guys know, that's like our average support line there. But what happened immediately after that? Once we got our close above the 60, we blew past the EMA 50. We actually opened right on top of it. And at 954, we had our 11% right here. And what else happened? We got our close over our 200, right? Now, for those of you guys who've also been in this chat, what usually occurs if we get a close over the EMA 200, if that is the final line of support or resistance, I should say, the final line of resistance? Richie, I'll answer that question in a moment, okay? Just a heads up. Generally speaking, yes, Ben. That's usually what happens. Blue sky breakout. Yes, moment. Thank you for that. Now, what happened? Did we get a clear blue sky breakout? No. And a lot of you guys can kind of be like, well, why didn't we get the blue sky breakout? Well, it's pretty simple. When we actually take a zoom in on the chart, the volume dried up, right? As we got our little breakout here. We still got our close above, where if you got in my entry point when I took the entry at 949, or you guys actually could have got a better average, which I know some of you guys did who took the alert right after when on this red candle, you guys would have been able to get anywhere from 10 to 14% right here on that first candle at 954, where I alerted, I was at 11.2%, I think, 11.43% to be exact. And then 3 minutes later, what happened? At 9:40 or 9:57. So we go from 954, 1, 2, 3. 9:57, we had 18%, 18.1% to be exact. Now, I could have held a little longer, held it to 10:03 and got out probably it would have been like 22% at this level. But 18% here is not bad at all and a great way to start the morning. And all that played out in 9 minutes from 9:49 on the alert, which was here, all the way through 9:57, which was here. Now, again, I was looking for a retest off of the EMA 200, which we got because that confirmed the double bottom bounce. We got our breakout past the previous levels of resistance, which is the EMA 50 and the EMA 60. Got our close above the EMA 20 and was able to get a rise up to here. Now, is anyone confused as to what was the reasoning for me, taking that entry at that point and what I was looking at? And while you guys are, thinking about that question here, I'm going to answer something that Ben asked really quickly. So Ben states it would have been a hard sell given that it looked like it was breaking all through resistances, right? And that's very true because typically once we break all of our EMAs, we're signaling some sort of a breakout. But again, there's got to be a combination of things happening for that breakout to occur, right? And then the number one thing for a breakout to occur needs to happen, we need to have the volume, which we did not, because once we got the break past the EMA 20, what happened next? We immediately had the lowest levels of buy volume on the next 2 minutes, followed by 2 sell candles in decreasing volume, not just low volume, decreasing volume on the next 3 green candles, right? So that is why we're looking like what I was looking at and why we did not see the breakout that we normally would have in that time frame, right? It's not just, oh, look at the technical. It's not just, okay, we got a double bottom bounce. We're looking at the chart patterns, whatever. No, it's looking at EMAs. We're looking at the chart patterns, and we're also looking at volume because a stock cannot move if money's not coming into it, right? Right? That's stock market 101. Miss Finance Girl, welcome to the market recap. So one thing I want to highlight really quickly though, guys, because I'm sure this has happened with our alerts in the past. It might even happen today. But I want to go back to when I learned the Google calls at 9:49. Okay. The thing is, when we alert something, we never want you guys to get in at a worse average than you, right? So if I got in the trade, I think I got in on the alert at 105, and I did no average down on any of the alerts I did today. So I got in at 105. If I get in at 105, and right here is where I know some of you guys got in as well on this drop, which I think probably put it down like 98 cents, because I think I was down 4% before we had the bounce here, right? I took it as we were retesting it. I didn't take it on the full candle close. So that being said, on that alert, once I'm filling, that is your next area to add. Which again, I know a lot of you guys do a very, very good job of taking alerts and getting better averages than us. You never, 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 never want to get in on an alert that, let's say we gave it and it's a 105 entry point on the contracts, and then you buy in at 111, right? Now, the reason why I say that, because once we got this candle break here at 9:54, which again, 6 minutes after the alert came out, I was at 11.8% or 11.18%. 11.4%, I'm sorry. So to put that in perspective, 105, 11.4%. So we were already looking at a premium price of about 116. So if you got in at, like, say, 111, the difference between 111 and 116 would only be sorry guys, I'm doing some math for you, would be about a 4% return. Now, do you guys see the difference there? Right? The difference between a 4% return, which is, you know, not the base hit that we try to achieve on all of our trades, versus an 11% return. The difference in that is getting in a play 3 minutes later. Alert at 9:49. At 9:53, 4 minutes later, it would have been a bad entry. So ideally, Ace, thank you for putting that in the chat. And John, that's kind of what I'm kind of getting at right here. A realistic spot to get in is you guys wanted a better average or exactly what we're averaging. And the reason for that is because that also gives you an understanding of where we're averaging down at, right? For example, I had someone ask me, I believe it was actually earlier today with IWM, which is the next ticker we'll look at in a moment. Am I going to average down here? And I was like, well, I'm not going to average down here just yet. I'm waiting for a specific level. But then I found out that that person actually had a better average than I did. And realistically, the way the trade played out, it should have been a nice significant return for them. They should have seen at least 35% if they got out when I got out. Right? Yeah, I mean, beating in the averages, guys, is the key. I know sometimes with some tickers, they move quickly, especially 0DTE indexes like SPY, IWM, and QQQ. But it's very, very important to understand not to chase. Now, there are chances where if we get a retest that you can take an entry again. Well, let's look at Google one more time before we go into another ticker. So when I took my entry here, right, I actually would not have seen, excuse me, after this immediate red candle right afterwards, the only other time I would suggest even looking at it would be this next red candle here, because everything else, we're going to get a push to the upside. And this red candle would have got you at a similar average to what I was at, maybe not 1 or 2 cent difference, but you still would have been able to get your base hit on this next big green candle here. I would not have taken on the retest down here, because then we're fighting against the trend, because now the EMAs are moving downwards and we'd be looking at a potential downward trend situation, which ended up actually happening. We saw a huge downgraded volume, confluence with all the EMAs crossing here, and we saw the massive sell-off around midday, right? So does that make sense in terms of like where your ideal entry point would be once the alert comes out, and what we'd be looking at if we're coming in maybe a minute or two late? Because if you came in this trade 5 minutes late and you jumped in on the calls here, right? Even though I got out here, by the time you rode it to here, you'd be down. You know what I'm saying? or maybe up 2 to 3%. And then for a lot of people, they would be like, well, I'm going to hold a little bit longer because I've seen some trade runners calls go up, 100 to 200%. I mean, not to toot my own horn, had a couple of those this week, but you know what I'm saying? But, if you would have done that, hoping for more, you would have lost a ton of money because we saw an immediate downtrend and we never saw a reversal back towards the top, towards the upside. So does that make sense for you guys? How did I confirm the retest? So let me see here. Oh, we got Ace dropping knowledges in the chat as well. Okay, so Rich, you asked, how did I confirm the retest? Could even go down, right? So are you specifically asking the retest on that I took right here? Or are you talking about the retest after the entry? Let's see what we got here. John, I'm glad that you're learning something new every class. That's something I love to hear. I try to make it, I try not to give you guys the same stuff every week. So I'm glad that, you're getting some value from this. Okay, so I'll touch on this here. Oh, Momeo, welcome. And we'll move on to the next ticker really quickly. Okay, so with the 200, my initial entry was here, right? 949. So what I was eyeing was going in expecting to bounce because of the double bottom here. Once I saw us bounce off here with the wick, I was comfortable, right, to take that entry. Now, again, like I stated, I was down 3 to 4% on this red candle because of where I caught my entry on the wick, because the body did not close strongly. So it was price action was there, but the open and the close of the candle was not, right? However, looking at the chart and looking at that minute by minute chart, when I did not go below that 3 to 4%, I'm like, okay, this looks to be a solid support line here, right? And then what happened immediately after that? We did not cross below the 200 because, again, in this sense, the 200 is the line in the sand, right? Those are the trades. If I would have taken that entry and then we went below the 200, I'd say, hey guys, we're cutting it here, trend reverse. We didn't get what we were looking for, right? Because you got to understand, with trading, it's not an exact science, but a lot of the times, if you're looking for, like I said on our Monday call and last Wednesday, you're looking for several things that confirm your thesis that's not just you being blindly ignoring other things that could go against you, right? So that being said, let's look at the other time frames. Okay, so taking a look at the 5-minute chart, I can see that we're okay. So on the 5-minute chart, I can see in that same frame, right, that we did not close at that time. Here, 945 to 950. This candle was the retest of that 200 line on the 500, gave us our double bottom here, did not go below it, and then we immediately saw an uptick, right? So there's not a technical pattern we're looking for here. We're just looking to see how it's interacting with the EMAs on this chart as well. I did not look at the 15-minute just because it's way too early for me to look at the 15 for the trade I was looking at. But if we did, we should get a similar confirmation of our thesis, which right here, 9:45 to 10 o'clock. This is just showing us the giant candle wick because of the price action, right? But let's look at the 3-minute, a chart that we rarely use here, right? Because not a lot of traders typically use a 3-minute when they're doing their swings because they're looking for what the majority is doing. What happened on the 3-minute chart? Well, at 9:42, 9:45. Hold on 1 second. I think I cut out a little bit there. Can you guys still hear me? If you can, please drop a yes or something in the chat. Okay, perfect. Thank you guys. Sorry. I had a little message that said my connection was choppy. So on the 3-minute chart, you see here, your entry was here at this point in time. And what happened? We did not lose our 200 again. So we just got confirmation on 3 separate time frames in addition to the one that I was using, the main one I was using, to state that we did not lose our previous line of support and we were going to see at least a short-term bounce, right? And again, the bounce that we got was enough to get a 20% return. So if you invested, not saying to do this for those of you guys who have small accounts, but if you had $1,000, let's say you have a $25,000 account, you put $1,000 into that trade, you just made $200 and you can really be done for the day, right? Yes, rarely used, rarely used. Thank you, CK. I rarely use the 3 minutes. But the 1 and the 5 also gave confirmation on the pattern there. So do you guys understand what we look for when we're trying to get an entry after the alerts coming out and try to a way to better manage your entries, exit points on those alerts? Because it's not just for Google, guys. A lot of this, the logic I explained can be used for, SPY Trade, NVIDIA. It can be used for Microsoft, Meta, QQQ, Apple, whatever, because the key thing is when you take an alert is you never want to come in late, right? We always say, hey, we don't want to chase, but chasing also means, hey, I just saw you put an alert. The alert came out 10 minutes ago. Is it still a good time to get it? Now, if it is a good time to get in, we can say, hey, look, we haven't gotten we're still around my entry point. This might be a good time for you to buy in, or we might have a little bit of a dip, whatever. We're pretty good at talking about that in the chats, especially when there's an active trade going on, right? I know Hovering Salt is actually really good at trying to talk people through and ask me questions in the chat. We get things going to kind of make it easier, and I kind of share my thought process with you guys, at least for the trades I've taken, right? And that way, it gives everybody the best chance of understanding when to exit, when to enter. That's why even now, if you guys see the alerts I put in, I'm even putting in how many contracts I'm buying, because in terms of scaling, that's the most important thing. Because if I'm buying 10 contracts, and saying, hey, I'm managing risk here, I'm cutting 20% here, whatever. If it's $100 per contract and I have 10, that's $1,000. Why would I suggest someone to go and buy 50 to 100? You know what I'm saying? But that's neither here nor there. Let's see here. Perfect. Thanks, John. Yes, Hovering Salt. I try to do that, and I try to let you guys get in some insight into what I'm looking at and how to read it too. So that's very important. So if my contracts are down 10 to 15% of the time, how do we confirm this is good to take the trade or no? Are you specifically stating if I enter a trade and then I go down 10 to 15%? Are you asking when is that a good time, Richie? And this will be the last question before we actually go on to the next one for real. Okay. With that one is it depends on the trade, right? So let's say I enter a trade and I get 10 to 50% down. I actually think that, okay, matter of fact, to transition to that, we're gonna look at IWM, okay? Because I gave IWM, I think we gave that around 11 o'clock. And that's actually a very good example to utilize for, give that at 12:48. So, all right, Steven, I'm going to answer that question after I finish this chart, because then we'll just get right into the Q&A session, guys. And then I just want to show you guys something really quickly. So with IWM, I gave that at 12:48. So let's look at the time frame, 12:48 here. And I was taking an IWM put, okay? What was I looking at for the IWM put? Well, I got in here because I was playing the potential double top, right? Playing the potential double top. What ended up happening? We actually got a small INS, right? Which is an inverse head and shoulders, IHNS. Small inverse head and shoulders, and then we kind of blew past some of the EMA levels, right? Now, when I gave that alert, I was down pretty significantly. I was down over 20%. Now, generally speaking, again, full transparency, if I enter a trade and I'm down 20%, usually that's, okay, I chalk up to a bad entry, I exit, and then I'll look for a potential reentry. In this case, if you guys remember, I said something specific in the chat, right? I said, and again, I apologize for the brief delay. I'm looking for it here. I had told somebody, because someone had asked me about it, and I said, well, I'm looking to see if we get a close on the candle below, I mean, above some key level I was looking at, right? Yes, hovering salt. I'm trying to find the exact one. I don't want to put words in my own mouth. You know what I mean? Thank you. Look at you. You're on it today. I love it. So 196.67 was the candle close I was looking at, right? So what happened here? We got our close at 196.67, right? Candle opened a little bit above that, 196.68. Got to close at 196.67. And then we got another one here. Price action went. And we did not go above that level. So what does that mean to me? Okay, we're going to get a little bit of rejection. You got a little bit of rejection. Buy volume died down, but not all volume died down, right? As you'll see in a moment. We got our rejection again past that previous high of that level that I was watching. Okay. And then what happened? We broke below the EMA 200, which in this case was acting as the first line of support. Broke below that, got a candle close right at the EMA 60. Okay, not the 50. We retested the 50 on the candle wick, which is the price action during that intermittent time period of that candle. But the open and the close, open above the 200, close below the 60, right? What happened next? Well, the next candle opened up right on line with the 50 and closed right on line with the 50. Interesting. Now we're in a little bit of a downtrend. Sell volumes coming in. Got a little bit more. And by the way, guys, this whole time I did not average down on IWM, right? I probably could have had once I saw that second confirmation of us not passing that level that I outlined. But I was like, okay, I went in with the 20 contracts, which was like a little over $400 because they were like 20 cents a contract. And I was like, I'm just going to ride it out, see what happens. And then what happened? Once we got past the 50, we saw a little bit of an uptick, but this big bulky green candle here. And does anything stand out to you guys of what I'm circling with the mouse? No volume at all, right? Very, very, very limited volume, okay? And even the sell candle right after that, very, very, very low volume. But here's the difference. That low volume sell candle occurred when there's no volume going in on the buy side either. So what does that mean? We get a large candle body, and look at this, something that's very interesting as well. You guys notice anything interesting about this candle and this candle? Correct, correct. So what does that mean? You guys know what it means? We have no wicks on the candle? Exactly. No wicks on the candle means the open and the close price action was right there within the entire range of the price. There's nothing, it closed at the low, open at the high, right? So that being said, volume is dead, volume completely dried up. We got two confirmation candles here that we're selling. Led to us, not that major one, led to us breaking below all of our EMAs, and we opened way under the EMA 20. And we actually got our sell point right around here. So that entire play, from the time I took the alert, which was 12:48 to 108, right, where we hit our 8%. So let's look at the time frames here. 108 here. Had 8% right here from my original entry. 20 minutes later, okay? And then we got our 20% where? At 110. So what happened at 110? Boop, boop. And we had our low of the period at 196.13. So just to kind of put a stamp in what I just went over, I probably could have averaged down here when I took my entry point, 12:48, right? Because I was down, like I said, I was down over 20%. Normally, I would be like, hey, I'm getting out of this position. But I didn't get a confirmation that we had completely bucked the trend just yet. And we actually had a nice rounded top into the downtrend. We were able to get out here with a significant profit without an average down, right? Yes, engulfing candles, Momeo, but even more importantly, we went over one of these patterns on Monday, but it was in the opposite direction. So we went over this pattern in the green. What is this pattern in the red called? Red soldier, that's a good guess. It's actually 3 black crows. That is what it's called. So we got some people with the answers in the chat. So that's very, very good. 3 black crows. So now it's a confirmation of the downtrend, which we saw our low point of the day. Then we saw a bit of a little roller coaster ride until we got back to the upper side, and then this sell-off happened. So again, IWM is a historically volatile ticker. It's extremely volatile for those of you guys who have seen me take it in the past. But that was the logic for what happened today. And realistically speaking, had I taken that average down once I saw that we didn't break that key level on the close that I was looking at, I probably, instead of having a 20% return here, I probably could have went up 40 to 50%. However, that's all fun and games. Everybody's woulda, shoulda, coulda account is probably up millions of dollars right now, right? But this comes down to 2 key words, guys. Who can tell me what those 2 words that I'm thinking of are? Now, this is some real important levels of stock trading. If you guys never take anything from any of these classes, these 2 words are the most important thing you'll ever hear. And while you guys are thinking of that answer, I'll give you guys 30 seconds to do that. Yeah, Ben, there are some funky names. I think whoever decided to name all these technical charts, like why would you call something the cup and handle? Who decided rising wedge versus falling wedge, and things like that, head and shoulders. I would just be like, hey, that's a big M. But let's see here. Trend is your friend. Well, that's not 2 words, Richie, but base hits is a good one. Stop loss is also good. And that all falls into one key category, which you guys have answered here, which is risk management, guys. It's all risk management, right? It's all risk management. I could have averaged down, but if I had taken an average down and that trend decided to say, you know what, I know you're looking at this level and we're decided to go above that level, I would have just been out a significant amount of money versus me saying, okay, listen, I have $400 in the trade right now. I got my 20%, which is $100, right? I think I was a little over $400. But I got $100 on that trade. And then, I'm cool with that, But if the trade decided to go full on reverse, I probably would have cut at 35%. And then me cutting at 35% means that I'm out, what, $175, right? Instead of 500, 1,000, 10, 5,000, whatever. Risk management is the most important thing, guys. That's why I'm putting the contract amounts I'm taking on the trades, because it gives you guys some insight into what I'm looking at and how I'm managing the trade. I mean, a couple days ago, I took I think it was a meta trade, the meta trade that I stopped out on. I started out with 3 contracts, about 3 contracts of meta. I averaged down with 2 more, and then I cut it when I was down $200. It's that simple, guys. That's risk management for you in a nutshell. And that's how you manage entering and exiting those alerts and reading what you're looking at there. So now I'm going to open the floor. We're going to do a couple minutes of Q&A, guys. I know, I'm sorry that I wasn't as maybe exciting or whatever it was I normally am, but I feel like this was a very good market recap in terms of showing you guys what I look for when I entered the trade, why I exited, where I would have averaged down had I decided to average down, and why I did not. So I wanted to give you guys some insight into that. So please drop some questions in the chat and let me know some of the things you guys want some insight on. We'll do it's 9:20 now. We'll do 5 questions. All right, Rich, you asked, how do I draw my exact support and resistance levels? Honestly, there's not really like a hidden secret to it. I mean, most of the trading that I do is based off EMAs and technical patterns. So I would just be looking at, let's take a look at, zoom out. Let's go back to Google, because I think that was the clearest example. So with Google, I'm literally just looking at, hey, are we going to retest this this key level of support here, which we've bounced off of in the short term, which was the market close yesterday. And if we don't get below that, that key area of support and resistance is outlined clearly right there for us. And so if we had broken below that, then calls are probably going to be cut unless we break below it and immediately close back above it. That's the only way. You know what I mean? So Ben, you asked, how do I decide what you want to trade for the day? So many tickets and things to look at. Other than the index Vs, I have no idea how to decide which name to focus on. Honestly, it really just like this is gonna sound like a cop-out answer, but I'm kind of like a nerd for stuff like this. Like I like just looking at tickers and kind of like, all right, what's moving today? How's the chart moving? What indexes are moving? What's the market news? I mean, CNBC is a good tool, and even like social media sites, if you guys are following the right people and just knowing what to look for in your search bar, those are very important things as well, because it gives you a feel for what's going on in the market, because the stock market reacts to news just like people do. You know what I'm saying? And so, for example, and this is actually something that even Ace reached out to me yesterday. He was like, "Hey, TR, I want to ask you a question." Like, what's up? He says, "What made you take Bank of America this morning?" He called me yesterday. And I was like, well, I kind of told him, said, look, this is like, bank earnings going on. I had seen that, historically, Bank of America, as well as like JP Morgan, all the other banks, they do pretty well. But I also told him, said, honestly, the reason why I chose Bank of America out of all the other banks was it's a personal reason. And the reason was, when I first started investing when I was 19, Bank of America was my very first dividend stock. When I first signed up for Robinhood years ago, I did my referral sign up. I got Bank of America share for my first stock, and to this day, I still get a little bit of dividends on the Bank of America stocks. So that was the personal reason why I took Bank of America, in addition to it being news related because of all the bank earnings that was going on, and that just happened to play out very well. Let's see here. We got, do I think Netflix and Tesla go up tomorrow? Let's look at Netflix's chart. Tesla is a whole nother ballgame, because I mean, you guys know I like Tesla, but at the same time, it's so volatile because it's not just news related for them. Anything that CEO does or says causes that stock to shift majorly. And that's something that, for me personally, it's, unless it's my long-term account where I think Tesla will still go up, go up, go up. I don't think day trading Tesla is that you're able to kind of predict where it's going to go without, taking a hard look at historical performance and kind of taking a deep dive. And honestly speaking, I haven't taken a deep dive into Tesla's chart in a couple of weeks. So I'd be doing you a disservice if I told you what Tesla looks like. Now, Netflix, on the other hand, because of its recent earnings, right? We're looking at it here. One thing, I do not like this. Do not like that at all. That is a terrible way to to end the week, right? That oof. That's a $10 wick. That is that's scary. Now, the only thing that I'll say is a saving grace is if Netflix is going to get its bounce off of the 200 here and break through. But let's take a look at the longer time frames of the daily. The daily, we're still in an uptrend, and on the weekly, we're still in an uptrend with no potential double top just yet. Let's look at the monthly on. And if we look at the monthly, we're still pretty well above the EMA support line, so we still have room to go up. And if this news, EMAs are actually curling up, so I would say I'm cautiously bullish on Netflix. But I don't have any position in it, so take that with a grain of salt, right? Let's see here. All right, so we're gonna do I'm gonna do two more questions here. I'll do three more questions. Okay, so you say Stonks says support and resistance. Do you use the candle low or what to draw a line? We're just seeing how we're interacting the candle open and the candle close. We're seeing how those interact with the different EMAs and how the price action, whether that confirms or rejects the thesis that we're formulating, right? That's why you never really want to jump into a trade after looking at a chart for 30 seconds, right? Unless it's in a clear trend, you're like, okay, I'm going to capitalize on this really quickly. But you're kind of looking at where the candle open was, where the candle close was, as well as historical supports and resistances at that level. Does that answer your question, Stonks? Let's see here. We got AT asked, how did I get into trading IWM? Because mostly before you alerted Amazon or Google. Yeah, actually, it's funny because before I kind of started branching out into a lot of other tickers, I was primarily the tech stock guy. I did Amazon, Microsoft, Apple, Google, and kind of stuck to that, right? Both IWM, this is actually a conversation that, you know, myself and some of the other traders had. We were just talking about like the indexes and how, if you look at historically, what's the most popular tickers that are being traded by retail traders as well as institutional investors. And in the top 5 were the 3 main indices. It was SPY #1, QQQ was up there, Apple was there, and then I forgot what the 5th one was, but one of them was also IWM. So I'm like, wow, this is this popular, and I've never actively traded before because I didn't really focus on small caps. You know, let me kind of get a feel for it and see how, you know, how it reacts. I mean, and as you guys know, I mean, I've learned quite a bit of it over the last few months, and it's paid pretty well. You know, it's a lot. It's kind of super volatile like all the other indexes, but it's less of a barrier to entry because the contract's so cheap. Now, on the flip side, because the contract's so cheap, a 1 or 2 cent move is significantly more damaging than it would be on SPY or QQQ. So that is why I got into IW, right? Yeah, John, we loaned some money to Elon. He's not gonna give it back. He's gonna charge you for it, if anything. All right, so Steven, you did ask a question earlier. Let me look at that one, the position sizing question. So what's a large position for you versus an average size position? Typically speaking, when I take an alert, I usually don't do any more than, you know, $1,000 worth of contracts. If like the vast majority of alerts I give, I'm like, okay, $1,000 is usually my cap because, you know, again, if that goes, if you're trading with 25K plus $1,000, you're like, okay, it's gonna hurt a little bit, but it's not gonna be, I can't feed my family for a month. You know what I mean? But the only time I take larger contracts like that is if I'm doing something like Meta, because the contracts for Meta are historically pretty expensive, and then Microsoft sometimes as well. But in those situations, obviously I'm buying less contracts. I'm not buying 10 or 15. I'm maybe buying 3 to 5 typically. And then in that sense, I think the biggest large contract position I had was, if you guys remember a few months ago, I know some of you guys might not have been here, but I had a Microsoft call that I think it returned like, it was like 11 grand. It was outrageous. But I also had, I think I had $5,000 worth of Microsoft now. Now that one was more of a calculated risk because they had earnings, and it was, you know, the buzzword was super positive earnings, also because of AI. So that was like, it was like a home run swing that just kind of worked out. Now, again, that's not something I recommend doing all the time. That's something I don't do all the time. Like I go in anywhere between, like I just said, my IWM alert today, I bought 20 contracts for $400, you know, because the biggest thing about the market, something you guys have to understand, market does not care about your feelings, does not care about you as an individual, doesn't care about your family, doesn't care about your kids. The market will take your money, chew you up and spit you out if you don't do what you have to do. Right? That's the most important thing you guys got to realize with that. Let's see here. Michael asks, is EMA curling up or down a good indicator? It depends. Generally, it's a sign that the trend is reversing or going in a specific direction, because if we're curling up, that means we're exiting a downtrend. If we're curling down, that means we're exiting the uptrend. And yes, Ben, YouTube is the best place to learn support and resistance. Oh, I would say the second best place. I think the number one best place is the TA server. Just, you know, being a little bit biased there. Let's see. The final question here, Miss Finance Girl asks, where is Carvana heading? Carvana is heading to the moon. If everything falls into place, right? Because like I told you guys last week, with Carvana, oh, I was like, what am I looking at? I was on the monthly chart. So with Carvana, we're looking at it here. We had a clear break. We, just like we talked about on our Monday call, or this might have been, wait, I'm sorry, go back, zoom out for a second. On our Monday call, we were talking about, you know, as long as we don't break below these EMAs or retest it, we'll be okay, right? And then looking at the weekly, we broke past the 50, we broke past the 60. Next level of resistance up here to 200. Now, is it saying it's going to get there? I don't know. We're way above RSI. And as you guys know, with meme stocks, you want to be completely careful with any potential holding it, right? Because the number one word that can completely derail any run up to 65, 70, 85, 95, that next level of resistance, $95 is one word. And I'm gonna put it in the chat for you guys. Yes, or hovering stop beat me to it, offering. That's one thing that you want to be very, very wary of offering. And yes, Ben, Ace has been telling us about Carvana since the 30s. And actually, you guys were in the server in March. We've been talking about Carvana for a long time because we were on the Carvana run up from $15 up to $30. Right, that's something that we've been very, very big on. And that's why when it went from 11 to 29 or whatever up to 30, we were like, Ace was really like banging the drum, like, guys, buy Carvana, buy Carvana. He even put it in the chat. I think he put a $50 price target in the chat. And I mean, safe to say, if you guys have known Ace or been around Ace long enough in the server, you know when he starts giving you a price target, it's not saying it's 100%, but he's confident for a reason. And it's safe to say that even when we had our pullback, he was like, hey guys, I'm going to buy some Lotto Carvana calls on these pullbacks. I'm going to, look at it here because a lot of people are like, oh no, it's going to die here. I'm not going to get in. And then what happened? Phew. So with Carvana, it has room to run all the way up to the 90s if all the money comes into it. But again, it's a meme stock. That Redbox, Netflix, not Netflix, Redbox, AMC, GME, recently still, Bed Bath & Beyond, all those companies. We had huge run-ups, and then some of them had the offering word, some of them had the acquisitions thrown at them, some of them had just like, hey guys, this is a meme, we don't want to do it anymore, or the Ryan Cohen effect, right? So there's a lot of factors that go into it, especially when a ticker is not trading off technicals or fundamentals. But with Carvana, it's very important to remember that it has a pretty significant following, and the fact that its earnings were very, very positive. Like, the reason why it had the run up prior to this week was because there were rumors that its earnings were going to be better than expected, and people were jumping into it. That's what got it from $30 up to $35, $40 range right there. And then once the earning numbers actually came in, it was like, oh wow, they might actually be happening, But from a purely fundamental standpoint, if you take it from the fundamental side, aside from their positive earnings, Carvana is still a pretty terrible company, but overall. But it's done well this last quarter. That's what a lot of its investors were expecting or were looking forward to. So that was why we had that run up. All right, so this is the final question here. Steven Anderson says, drop an offering while in options play, and you basically lose all the money you put in. Basically, what happens when a company has a stock offering, there's a massive sell-off from investors because if you're in at a specific price point, when you do a stock offering, you're generally lowering the value of the individual shares. So they're trying to get out while they can, and that amount of selling going on, you're inevitably going to drop the pricing of the ticker. So let's say, give you the recent example of the offering that happened with Bed Bath & Beyond. Bed Bath & Beyond was like, it was around $10 per share. Then there was the offering, I think, dropped down to like $2, So imagine you're holding $11 calls thinking, okay, cool, we're at 10.50, whatever. And then you drop down to 2. You don't want to be in that anymore. You want to get out as soon as possible. So that's why when you're in offerings, you want to get out, or it's going to be a huge, huge money burn. Let's see. The mysterious iPhone says, how can I learn technical analysis? Any recommendations for videos? Yes. YouTube. There's actually one that I know Ace dropped in the some of the growth groups before. We can see about getting that posted in there as well. Ace, if you have that link, you could drop that into whether the chat or the July growth group. That would be great. Just so that way these people can understand some basis of technical analysis in a way that would make what I'm saying a little bit more understandable. And they'll be able to kind of put pictures to the patterns that I'm discussing, right? They'll not be right away, of course, but just wanted for future reference there. And yes, there you go. He dropped it right here in the chat. So guys, copy this, and I'll actually I will copy this as well, copy the link, and I will drop it in the chats. So I will drop that in the chat once we're done here. But that being said, I want to thank all of you guys for just being on this call with us. I hope that you guys were able to get some information and understand a little bit better as well, not just understanding what we're looking at on the chart patterns, but also how to take an entry, how to exit an entry, how to apply, you know, where to average down, what are you looking at, things like that. Just becoming a better trader, right? And before you guys all leave, just as a reminder, we're taking attendance for a potential giveaway for class attendance. So please drop your Discord names in the chat of the Zoom call. That way we can take attendance and get all of that set up for you guys. All right. Thank you guys so much for your time. Really appreciative. Hope this was helpful, and I'll see you guys next week.